Well, hello. How are you doing there, folks? Thank you for joining our stock trades. In this video, we're going to find the intrinsic value of the Upstart stock. Essentially, we're just going to find how much it's worth and whether or not it's a good investment should you be doubling down based on the revisions. So as you can see, the stock it took a huge dive around negative 58% in 5 days with a 52-week high of $400. Now, before we get into the analysis, I just want to be very clear, okay? Now, here we got access to institutional data. We have smart money in blue and dumb money in red, okay? Now, I go on CNBC and I listen to all these people. I go on to Fox Business and I listen to all these news anchors, and they're all saying, with inflation coming in, things are getting a lot expensive, and that's translating into the stock market, and stocks are dropping now. You know, what's happening is stocks are always forward-looking and forward-predicting, but they don't always get it right. Whenever you get panic and fear, you actually get a stock market where Mr. Market comes knocking on the door, a Warren Buffett analogy, and gives you a price that doesn't comprehend to the actual value of the stock. And what's interesting is you have the power to either sell to Mr. Market or just close the door. But guess what? Mr. Market's going to show up the next day and the next day and the next day. And it's up to you to understand how much is your stock worth. Now, before we dive deep into the finances and all this other things that's important, I want to show you this institutional data here, where you can see dumb money is off of the chart. I mean, look. I mean, we've never even seen dumb money go that low in such a long time. Dumb money is selling. They are getting rid of their positions. They are liquidating their positions. I feel so bad. I'm sure people on their 401ks are selling right now. Retirees are entering back in the workforce. It is really looking bad right now. And it's just, the sad part is you just got to hold dollar cost average. You can't time the market. But you know what's funny right now? I am buying the dip every single moment right now because look what smart money is doing. Smart money is attacking. A couple days ago, we saw it curve down, and I said, we're about to experience some stock market turmoil because we saw this curve up. And usually, smart money comes in when the stock goes down, as you can see here. Stock goes down, smart money starts buying. So if you haven't seen this indicator, make sure if you like what you see, subscribe, comment, like, and share. I want to hear what you think about it, so please comment down below. So now let's go straight to Upstart. So let me make my bigger. I got a little helicopter on my head, a little TikTok, helicopter. So if you look at Q1 here for the non-GAAP EPS, they went ahead and did a 61-cent beat, and they beat by eight pennies, right? Now, if you look at the revenue, they had a revenue of $310 million, which is 155% year-over-year growth, which is a beat by $10 million. So that's a pretty massive growth, right? Well, we're not going to be using that growth, which I'll explain why. Now, the Q2 outlook revenue is 295 to 305 million versus the consensus of 334 million. I'm leaving the 0.83, so it's easier to say. But if you look at it here, guys, what you're seeing is that they delivered under expectation. And right now, in the type of market that we're in, you better have a solid earnings report, because if not, the market's not going to deal with you, right? So if you look at the forward-looking metrics for 2022, you do see a revenue of approximately $1.25 billion versus the consensus of $40 billion, which is a difference in 10%. So that difference was factored in by 4 to 5x the stock price, which will explain why that was factored in. So here's the issue right now. So for people that don't know what Upstart is, it's a place where you can refinance your loans, get new loans, and borrow money to pay off debt and whatnot. But the issue here is that Europe is going into a recession soon. If you were to look at all the houses of the economy, the one that's going to crack first is that's tied right now at first is either going to be Europe or China. And we know that the oil prices and gas prices have been up for more than 50 to 100% year over year, and that's going to pinch the consumer's pocket. So that might hurt their business. Now, we're going to go ahead and take a look at the and calculate the net difference of the percentage from 2021. They made $847 million. In 2022, they made $1.25 billion. Now, they're expected to make $1.25 billion. Now, I should have put it in green for expected. Now, if you do this, you do the starting value minus the final value divided by the starting value, you would get this calculation of 47%, okay? That is going to be the growth year over year from 2021 to 2022. However, you want to protect yourself when you do a calculation, when you want to find the intrinsic value of a stock. And to do that, you just basically say, I'm going to be bearish, and I'm going to say, I know that they just revised. They thought they're going to make 1.4, now they're going to make 1.2. They revised it, but on top of that, I'm going to say they're going to grow only 75% of the 47%, giving you 35%. So I'm even cutting them even more. So when I evaluate the stock, I'm going to be a little bit more safer. So now these are the numbers we're going to be using. You can see the revenue has gone up consistently. The free cash flow, it's free cash flow positive with 153 in the most recent earnings, which we're going to be using. And with that, if you look at their gross margins, you can see that it is over 80% consistently throughout the many years, indicating this is a really good business you want to be a part of, because that dollar that they make, they get to keep more of it, 80% of it, rather than it being turned into the business. They're able to keep that after all said and done. So within our intrinsic value calculation, we put in the free cash flow. As I told you, at 47%, we took 75% of it, giving you 35%. We're going 10 years into the future, and we want to see what is the value of the stock price now, and is it over or undervalued? Now, again, I shrank this number because I really want it to be, I want to be so conservative now that I need to make sure that all these stocks that I'm buying are completely undervalued, where my rate of return is going to outperform the S&P for the next 5 years, okay? I want to know that, and the way to do it is you set criterions that are so hard that if a stock price is under that, you know without a discernible doubt that you are going to make money on it. So here is the calculations, and it's easier to look at the graph here that we provide at All Stock Trades. We have a bull case of $217, a base case of $147, and a bear case of $105. Now, what's interesting is on top of this bearishness, we took the bear, which is a 15% discount rate, applied a 20% margin of safety, giving you a price target of $84. So our price target for Upstart is $84. And we already know it's currently being traded at $34. And this is with a 15% discount rate cut and on top of a 20% margin of safety cut, on top of a 75% year displaced growth, which would normally be 47%. So you know that this is definitely undervalued. Even in our proprietary brain machine, which is our own software that we've injected in our private Discord channel, which you can find linked down below at All Stock Alerts, we can see that the price is around $31.95. That was when I took it, when it's extreme bearishness. And the DCF, the calculation of what the value of the stock is telling me that's $88.76, indicating that we are literally right around our margin of safety price of $84. So you can see right now, this stock is a win-win. Well, I hope you enjoyed this video. Thank you for Moomoo for sponsoring our videos. If you go down below, in the link down below, you can get 5 free stocks. Also, don't forget to visit our website at allstocktrades.com. We've been featured on Bloomberg, Benzinga, Yahoo Finance, and many amazing companies about our mission in democratizing financial information. I hope you appreciated this honest evaluation of the Upstart stock. Don't forget to like, comment, and subscribe. Thank you.